Navigating the Nigerian business landscape presents both challenges and opportunities for entrepreneurs and investors. While the country boasts of immense potential for growth and profitability, persistent inflationary pressures can significantly impact business operations, ranging from increased cost of goods and services to fluctuating consumer purchasing power. Now, dealing with these is critical for any business to succeed. And joining me for more on this is Oluwatosin Olaseinde, the CEO, Money Africa. Thank you, Oluwatosin, for joining me today.
Thank you so much for having me. I'm excited to be here.
Absolutely. Now, let's talk about this now. Many great ideas struggle to, become successful businesses, and what are the necessary steps, to move from ideation to reality?
You just have to move. So in order to move from ideation to reality is actually taking that step. And then as you take the step, you'll be able to then see what is the next step. What can I do next? But you have to literally just make that move. Sometimes the business might not be viable, but you wouldn't know if you do not take that step. So you have to make that move in order to be able to ensure that is the business going to be successful or not.
All right, so in doing that, taking that step, what are the things that are involved in all of that? Maybe you need to do some market analysis, you need to do something. So because I understand that, yes, if you do not take that move, you may not know if it's going to be viable or not, but I also expect that you've done your homework. And to a very large extent, you're maybe 90% or 90, I do not want to say 99, but 90% chance of, having a good business. I mean, let's talk about the things that make up that aspect.
Okay, great. So based on research, 3 in every 5 startups do not make it. They don't make it past the first 5 years. They die off. But you could be the 2 out of every 5. Some say 4 out of every 5 don't make it. You could be the 1 out of every 5. So now what do we do? Number one, we want to do some research. We want to do some research, learn about the business, how does it work, things like that. Speak to people that are currently doing that business, right? Read online if there's any curated article about it that goes into detail. Now, once you've done that, the next thing you want to do is you want to test a sample. By testing a sample, something that is a very small size, and this is now taking steps, right? So you want to then take a step and test that sample. How can we do this? We want to also leverage on low-hanging fruits, right? We have things like Telegram that is for free, emails that is for free, Instagram that is for free. Put it out there. Tell people about the product. Put it in their hands, put it in their faces. Start getting feedback. Now, based on that, you can then continue to compound. So some people say, go and build a website, hire a team, and do all of that. It depends on your budget. If you don't yet have a budget for that, instead of a website, a WhatsApp can actually still serve you, right? You're getting feedback, you're making your first revenue, you're listening to your consumers, and then you can gather enough capital to go the next step to then build websites and do all these other things. Also, there are lots of payment companies that help small businesses build a one-pager with their products. So don't feel overwhelmed like, oh, I have to invest and build out all this really amazing product when you can just try, test the market, put the products there, look for a one-pager website where people can, easily make orders and buy, leverage on low-hanging fruit social media, and then you can start compounding towards growth.
All right, so let's talk about the major challenges, business owners have to deal with in the first few months or even years that can either make or mar a business.
So the big or major challenges, number one, really is funding. Funding is a very, very big thing. Funding is a very big thing. People who could have great ideas, but the businesses might die before they get to see that business succeed. Sometimes a product comes into the market too early. Not that they are stupid or they have a bad idea. The market is just not ready for that product. So funding is one of those things that can carry you on to when the market is ready for it. Another thing that could also cause a company to split is with founders' disputes. So if the owners have disputes amongst themselves, this is some of the challenges that they could actually face, and then they might not be able to go on. Now, the other thing that is also a challenge is when the fire goes out, when the founders and the owners do not have any more fire to go on. You'll be surprised. Once you have the energy, the fire.
So let me come in here.
Okay, go ahead.
I mean, if I have a great idea and I have invested, into it, how then will I all of a sudden, lose the steam? What causes that?
It happens all the time. many a time people go into a business hoping that they're going to get certain numbers, and then it does not happen. Reality is different. They struggle to, many business pivots, right? So if you look at even Samsung, they started as a grocery store, and then now they are them, manufacturing phones. So, and that is because of the tenacity of the founders, that they knew that they were going to go from a grocery store to manufacturing phones and making crazy amount of money in revenue. So if that hunger, if that energy to continue is not there anymore, the business is definitely going to fall apart.
All right,
So
so
yeah,
I've
it happens.
okay, I've had to, speak with many businesses on the field, and for many of them, these are challenging times. I mean, have businesses had this bad in recent years? Because talk about inflation, talk about, we know the twin policies of the federal government and how it's impacting businesses. I don't know, in recent years, has this happened before?
Uh, it's let's speak about. I think what even makes this particular situation interesting is that everything is happening at once. So with all that is happening, there is nothing new under the sun. We all know that the naira has been depreciating for a long time. If we look at our parents' time, it was about 1 naira to the dollar, and we are currently sitting at what? 1,200 naira. So they know that devaluation is not a new thing. The problem that is happening now is that everything is happening at once. So there's a devaluation of the naira, there's an increase in price of fuel, there is an increase in electricity tariffs, everything is happening at once. And that is why this particular time feels so different and feels so unique, right? So it's not the first time we've experienced increase in tariffs for electricity. We've experienced increase in fuel prices. We've experienced devaluation of the naira. But for everything to happen at once, that's what is different about the situation.
All right, so
And that's where the challenge is.
okay, so how are, businesses navigating this period? I know you work with businesses and all of that. So tell me, what are they telling you and what are your recommendations?
Some of them are shutting down. Some of them are letting go of some of their team members. Some of them are collaborating where two companies come together and become one. That is, you're seeing mergers. Some of them are taking a break. They call it a freeze. So you're temporarily just taking a break and holding on, hoping for the future to get better, right? And these are some of the things that we are seeing business owners do. On the contrary, some people are pivoting, meaning they're leaving the businesses they were previously doing and pivoting into new ones that will align with the times that we are currently in. So these are all the different things that you're seeing business owners, trying to dabble in.
I like what you said last, talking about, looking for businesses that sort of fit into the time. So what are these businesses? What can they be that fit into the time that, if we venture into them now, we'll make money and not, lose money?
So, for instance, we know that the cost of electricity tariffs is going up, right? Many people are struggling. You hear people keep talking about heat and things like that. For a person that sells an electric fan, you know that somebody might not be able to buy your electric fan immediately. A company that was previously not giving buy small, small is now making that offer, right? Because it knows that its customer cannot buy that electric fan at once. How about people that are doing solars? They're looking at how can we make a smaller one that can just charge phones? How can we market it aggressively? People are going into those sectors. People are also looking for ways they can package to the global world. So if Nigeria is currently tight, we have these skills, we have this knowledge. Can we target New York? Can we target London? Can we target other places? And they're just looking for how to pivot, looking for how to earn in Forex, right? So now they're looking for how a portion of the income of or a portion of the revenue of their business could be generated from, global companies or global clients base. So these are some of the things you're seeing businesses adjusting and trying to fit with the times.
This sounds like, some savvy business owners, sounds like maybe in the realm of maybe small businesses. What about micro businesses? How should they react at this point? What should they do at this point so they can, stay afloat?
So for micro businesses, you have to also listen to your market, right? And ask yourself, what else can we do? So for people that were previously not attached to the financial market, let's say for instance, they need loan to be able to do certain things because things are really now expensive. that companies that have never taken loans in their life, especially the micro ones, there are institutions that actually give micro companies loans. It might be time for them to explore it, fully understanding how it works, so that they don't use it, so that it's not in their it's not to their detriment, right? Another thing that micro companies can also look at is actually speaking with their team members. They're closer to the grassroots. They're closer. Ask your team members. No, you can't do it alone. So let's say you're a micro business, you have only one or two people. Speak with them. What else can we do as a business? What have we not uncovered? What have we not touched? You'll be really, really, really surprised. Sometimes people are sitting down on knowledge that their team member have, but they've not asked them or they don't trust them to be able to, share it with them.
All right, so just before we go, I have like two more questions to talk to you about. I know we've mentioned this during the course of this conversation, but I want it to be more maybe structured now. So to successfully run a business or startup at this time in Nigeria, I'd like you to talk to us about factors that will engender success.
Okay, factors that will engender success. Number one is doing your research. You need to be able to understand what is the business is about. Number two, speak to people that have gone ahead of you. There's nothing new under the sun. Somebody has done it. And now with the beautiful thing about social media is that it gives you access. Go on LinkedIn, go on Twitter, go on Instagram, go and find them, speak to them, and just, that helps you have some knowledge so you're not repeating the same mistakes. Number three, you have to put your foot in the water. You have to test the market, create a small sample size and start testing. Number four, leverage on low-hanging fruits. Get your mailing list, market your products on Twitter, WhatsApp, Instagram, pay for those small ads. Let your users, potential users, interact with it. Number five, start getting feedback. Call those users. What do you think about it? What can we do better? Can I do a package? Can we tweak it up? And that's a good place to start. And then you can then continue to build up on it and compound. Now, you must bear in mind that there are different types of products. Some people are selling a service, some people are selling hardware products, and you might have to tweak it depending on what you are selling.
All right, so in closing now, are there things you think, the government should probably have done better to help businesses manage, this period? In 30 seconds.
There's a whole lot they could have done better. I felt like they could have had some cushioning. Everything happened at once. They could have faced it out a little bit. But we're here now, and then we're hoping for victory. We want them to succeed. It's in everybody's interest if the government succeeds. We want them to succeed.
Absolutely, it's in everybody's interest if the government succeeds. Oluwatosin Olaseinde, CEO, Money Africa, thank you for your time on the show today.
You're welcome. Thank you.
Investing might seem like a complex and intimidating topic filled with unfamiliar terms and market fluctuations. However, it's one of the most important building blocks for achieving financial independence and building wealth. By understanding the basic principles of investing, you can boost your confidence and feel empowered to take control of your financial future. Now, joining me to break down the basics of investing in a clear and approachable way is Oluwaseun Magreola, the head Investment Management and Research, STL Asset Management. Thank you, Oluwaseun, for joining me today.
Good morning. Thank you very much, Perpetua, for having me.
All right, so let's begin by differentiating between, investing and saving. I mean, what's the difference?
So basically, in a layman's term, savings is simply putting funds aside in a bank account periodically to meet certain short-term goals, and could be for also emergency purposes. While investing is using your funds to acquire assets that have the potentials to grow and give you higher returns in future. So potential assets like stocks, like bonds, like mutual funds, and other financial instruments, but it comes with some level of risk depending on the assets and depending on the investment horizon. I feel those are just the basics for in terms of definition for a layman.
Okay, I guess it's the risk that probably determines, what your returns will look like. So, beyond just defining these two, I'd like you to differentiate, So if I do the savings option, what am I likely to gain at the end of the day? And then if I go for the investment options, what are the maybe pros and cons?
Okay, so for savings, to a large extent, the risk involved is relatively close to zero because you're just setting money aside, more like a demand deposit. And that's why you earn little or nothing on it. because the investment is more demand. You can come anytime to request for your money from the bank. It's not a fixed or timed sort of investment. While on the investment side, the potential for growth is quite higher because you can leverage on the abilities of compounding interest and the ability of reinvesting. So you can, while investing, you can combine both the principal and the interest you earn and also invest, which is compounding, and trying to invest to earn higher returns. But basically, like I said before, for investment, it comes with some level of risk depending on the type of investment you embark upon. So some investments are very, very risky with higher returns. Like the rule of thumb is the higher the risk, the higher the return or the reward you earn on such investments. So I think those are just the sort of thin lines between both of them. But like I said before, investing comes with some level of risk, and part of the risk is you can lose all your money, depending on the type of investment you embark upon.
No, that sounded scary.
Pretty much answers it.
Okay, so I'm tempted to just jump the board and ask you, what should I do as an investor so I don't lose all the money? But I think we'll come back to that. You mentioned some instruments earlier. You talked about stocks, you talked about fixed income, you talked about mutual funds and all of that. Help us understand, these instruments, and then we'll probably zero in on one of them.
Okay, so basically there are three broad categorizations. We have the fixed income instruments, the bonds, the commercial papers, the bank placements. They have some level of returns. You have principal and some level of returns on it. We have the stock, whereby you have an ownership right, unit of ownership rights in the company which you invest in, and that is it comes with a higher level of risk because you can lose all your money if the company doesn't perform well. Then we also have alternative investments, and these are also quite large in number. We have the real estate, commodities. You want to do even cryptocurrency, digital assets come under the alternative assets. Alternative assets are assets or investments that don't fall under the conventional type of investment, which is fixed income and equities. So speaking to then, we also have a product that can have underlying assets in any of these three. And specific examples are ETFs and mutual funds. So for a layman, if you want to invest, if you are looking to invest, I feel you should start from the less risky type of investment before you could move into the riskier investment, just to give you some level of comfort and some level of ability, because it won't be good as a first timer you get your hands burnt while investing. You won't want to touch investing, or you'll be scared from investing in the future. I don't know if that answers your question.
Absolutely. You talked about mutual funds. Can you tell us a bit about it? I think for someone who is just starting, you're not necessarily the one who is checking the updates, trying to know what's happening in the markets and all of that. With mutual funds, I guess, there are asset managers who are doing all of that for you. I'd like you to speak a bit on that.
Definitely. So for mutual fund is a pooled type of investment where the fund manager gets money from different investors and puts it in the fund and invests on their behalf, and also helps them in the day-to-day running of the fund, and also give them return periodically as stipulated by the trust deed of the mutual fund. So it could be a fixed income type of mutual fund where the underlying assets are bond. It could be a money market mutual fund where the underlying assets are money market instruments like commercial paper, treasury bills, and bank placements. It could be a balanced fund where we have a mix of both fixed income and equity investments or instruments, while we also have a pure equity play type of mutual fund. Now, the major advantage of the mutual fund is it's less risky depending on the type of underlying asset. So for money markets mutual fund, you have short-term instruments as the underlying assets, which are money market instruments. Like I said before, bank placements, commercial papers, and treasury bills, and these have zero to none type of risk attached to it. And also, one major advantage or key advantage of mutual fund is the entry level is quite easy. They are quite cheap. Some as low as 1,000 naira, as low as 5,000 naira. And it exposes you to instruments which, if you had gone individually on your own, you might not have had exposure to such instruments. So I give you an example. To play in the primary markets of treasury bill, you need about 100 million naira, 100 to 50 million naira thereabouts. Now, for a layman, you might not have such huge amount, but with your 5,000 naira in a money market fund, which is being pooled together with other funds from other investors, the fund itself can invest in a treasury bill on behalf of you guys, and whereby you'll be exposed to the return on the treasury bill. Whereas on your own, with your own fund, you might not have been able to gain exposure into those type of asset classes. So that's why we always advise starters to also start with mutual fund, which is a less riskier type of investment. And also it saves you the stress of monitoring, of day-to-day checking of the fund, because there's a portfolio manager that does that for you, or you just monitor your price and periodically when they pay returns on such mutual funds.
Okay, let's talk a bit
So
about the stock
that's
market.
basically advantage. Okay.
All right. Let's talk a bit about the stock market. I'd like you, to tell us what's the entry requirement really? Do I necessarily need a portfolio manager or a funds manager to get into that? Can't I just, get on a particular, let's say get on a firm's website and then start my journey?
So for stock market, I usually advise is knowledge driven. I usually advise you seek professional advice from your stockbroker, from your portfolio manager before you start, because it's more knowledge based. Then, to be sincere, to be candid, technology has made things a lot easier now. So there are a lot of apps where you can subscribe to and you can gain exposure to the equities market. But like I said before, it comes with a lot of risk. It's an high risk type of investment instrument. So you really need to understand how the whole cycle plays out before you get your hands burnt. But it's something you can expose yourself to using leveraging on technology. That's all these investment apps we have out there. Or you can also, like I said, expose yourself through an equity-based mutual fund, which would give you a bit of safer comfort, unlike you exposing yourself fully. Because for investing in an equity-based mutual fund, you have an advantage of diversification, because the mutual fund has different type of equity instruments in it, and you can take advantage of whatever returns they earn on those individual assets by investing in the mutual fund. So for equities, like I said, it's knowledge-based. Seek professional advice first of all. Then you have to have a bit of understanding of the market, how the market play out. You need to understand how the market runs. So for the knowledge-based,
okay. Let me come in here.
I always advise a top-down approach. You need to understand the macro economy, you need to understand the industry specifics, then the company itself, how the company has performed over the years historically. You can read about their dividend policy. You can read about their performance, financial performance.
This is a lot of information, but I want to believe that there are people who really do not mind. I mean, they have the money and they probably will be ready to read all of this. And then when we talk about stock market, we hear that some persons are called farmers, some are called hunters, and then there are some terminologies we hear, okay, the market's closed bullish, bearish, and all of this. I'd like you to probably just help us understand what these things mean, and then for someone who's just starting and is considering the equities markets, maybe you just help them, just some form of foundational knowledge for them to probably start. Yeah.
Okay, so for equities, when we say the market is bullish, that means the market is gaining, has a positive momentum driving the market. Stock prices are rising. So that is bullish. It is green, in green territory. When it is bearish, it's the other way around. It's going down. Stock prices are depressing. The prices are going down, and there are a lot of losses in the market.
And your money is going down too.
Yeah, if you are already invested, your money is going down. But if you are yet to invest, it will be better to enter at a bearish period where prices are going down, so you can enter, because the logic is you buy low and you sell high. So you enter at low prices and you sell when the prices go up. For hunters and farmers, it's more just a terminology. For hunters, it means you are actively managing your equity investments. For farmers, it means you are adopting a passive strategy. So passive strategy, you are leveraging on some level of algorithm, which we call Fasanmi-Peter, to help you manage your funds. While for active, you are tracking day-to-day, you are tracking the portfolio, you are watching the performance, looking at the PE ratio, the dividend yields, and the likes to manage your investments. So those are just the two differences in the two terminologies. Hunter, you are actively managing your fund. For farming, you are passively managing your fund.
All right, so generally speaking, you were saying something? Okay. All right, so generally speaking.
I wanted to be sure if I answered your questions.
Absolutely, you did. Generally speaking, help us just wrap this up, basically, just maybe a thought. Just leave a thought for someone who is just about to start investing, to start his or her investment journey. Just a thought.
A thought. So basically, like I always advise, a rule of thumb, investing is good. It's better to invest than to save, because you get higher returns. But to invest, you need to start from safe asset classes. You need to start from less risky asset classes and build that confidence, build that momentum over time before you dive into risky assets. And definitely risky assets will give you higher returns. So, but it's not so good as a learner, as a first timer, to just jump into risky assets. You will get burnt. And also seek knowledge, which is key. The key fundamentals driving the market, whichever market you want to play in. You need to seek professional knowledge. You need to research. You need to have that knowledge, because knowledge is what drives the market. If you understand what you are doing, you have that confidence, and there will be less risk in terms of your risk appetite will be quite increased. Your ability to absorb, because you understand what you are doing. We have a lot of people that are investing without the basic knowledge of what they are investing in. And when they get burnt or when the market is down, they run high blood pressure. But once you understand what you're investing, even when things are down, you understand the fundamentals already, and you know this market is a cyclical play. Things go up, things come down, and it has its seasons and periods where
All
you
right,
can take
Oluwaseun, thank you so much for your thoughts. I feel this stock conversation is something we'll probably have another time so we can better understand how it works. Thank you so much, Oluwaseun Magreola, Head Investment Management and Research, STL Asset Management. Thanks for your time.
You're welcome. Thank you very much.
Thank you for joining us again. Well, we're talking about the music industry now, and it may seem to be all about creativity and catchy tunes, but behind the scenes, there is a complex business engine driving it all, and that's why we have a music producer, Olumide Ogunade, popularly known as ID Cabasa, right here with us today. ID Cabasa, thank you for joining me today.
Thank you for having me. Good morning.
Good morning to you too. Well, it's okay to assume all we know about music production is all there is to it, but let's hear it from you. What does your job as a music producer really entail?
Okay, traditionally, a music producer, when you look at the music business itself, a music producer majorly is the guy in layman's time that cooks the music itself. You have the artist who is going to probably sing, you have the songwriter who is probably going to write the song, but you have this guy that is going to bring all the elements together. But in contemporary time, now, which is now, the music producer majorly focuses so much on making the beats and recording the song. That is recording the song when we get to the studio and making sure that the right instrument is used, the right tone is used, the mix and mastering of the song is actually well done. So at the end of the day, the music producer majorly is the one that is putting all the elements of creating the music together and making sure that the music is actually ready for commercial use and commercial purpose. So basically, in layman terms, that is what we do.
All right, this is an industry that it's a multi-million-dollar industry. And of course, we need a lot of persons who have the skills to go into it and make the money. So talk to us about, the several business opportunities that are inherent in this particular industry.
So the industry over the years has created several opportunities to people that are coming into it. And if you notice in recent times, a lot of young people would rather want to go into that industry because of how lucrative it is. It has become over the years. So, you spoke about skills now, and that is one of the places that I think people might need to start paying attention to. Not just to see, when we talk about skills in music, not just to see it as a guy that is talented, that can do that can either write a song or produce a song or sing a song. It has gone way beyond that. The music business is an ecosystem that has several corporate entities behind it, that has several systems around it. Systems like we have the A&R, which is artist and repertoire. We have the promotional side of it. We have the PR part of it. We also have the touring part of it, where you are employing sound engineers, you are employing dancers, you are employing creative directors for the artist brands and all of that. So there is so much more to even be done. In fact, there are some that are yet to be scratched here in Nigeria, because we are still looking out for people that we take the artist from being a recording artist to a performing artist. When you look at the likes of Burna Boy, you see Burna Boy perform on all those big shows. It goes beyond just being a good artist that can record the hit songs. It also takes the back end. You look at the back end of, okay, who are the people responsible for arranging what they get to play at those shows? You look at the people responsible for drawing out the content of what it does at every shows, who is recruiting all the instrumentalists that are, like for Burna Boy, and I know Burna Boy, we have nothing less than 60 people on his team. That is just one artist. Now, just imagine the array of artists that we have, all the kind of jobs that can actually come from creating all of this. And so it's an ecosystem. It has gone beyond, the normal one-man business where you, the artist, you are your own manager, you are this, you are that. It has grown to become a fat industry that lawyers are finding jobs even within our ecosystem. Look, journalists are finding jobs within our ecosystems. Business analysts are finding jobs. They are seeing new opportunities. They are seeing how an
ID
artist
Cabasa, I
Yes,
like what you
I'm here.
said. I like what you said about the opportunities and all of that. And I'm thinking in my head, what if I have one of these talents you've talked about? How can I get hired? I mean, how do I get on the team of some of these big guys and work for them and then get paid?
So there are music business courses that you can do online. Because if you are coming in, let's say, for instance, you are a business analyst, you definitely know that the music terrain is a totally different game from most of the terrain that probably an entrepreneur that wants to make a product is coming to you. You know how to go for your data, you know how to go for all of those sources. But for the music business, you definitely know that there will look so much more beyond what you can see physically, because music is an emotional business. You need to know all of these things. So there are informations that are available online. When you go to YouTube, you can learn music business online. You can learn it from YouTube. But like for me, I had to take it from music being a passion for me to actually do a short course with Berkeley School of Music about music business and all of that, where I got to see the businesses in streaming of music and doing all of those things. Look, let's imagine you are a lawyer. You have gone to school, you have gone to law school, you are now practicing law, but you know that the music business law is a very peculiar one. Probably you take a short course on that, or you take out some time to actually study how that works. Then you start to approach the industry. You start to make relationships around people that works in the industry. You start to talk to people, look for a niche that nobody is paying attention to. Try to sell it to people that, look, I can actually help you take your stuff from here to there. And anybody that you are telling that will find interest in what you are saying, and they might eventually hire you.
All right, ID Cabasa, I remember earlier you talked about some opportunities that haven't even been harnessed or are not even
Yeah.
probably known here in Nigeria. Could you highlight some of these opportunities so you never can tell? I mean, we might have persons who can jump on it.
So I'm not saying that they are not known in Nigeria, or people don't know about them, but it's just that we've not yet exploited some of these opportunities. Like touring, few artists in Nigeria tours. There are, in Nigeria itself as a country, people have not really embraced the art of touring. Merchandise, people are not paying attention to the fact that once you become influential, once you become a big name that everybody wants to come after, you can actually create merchandise which you will make crazy money for. I was at a concert in, I think it was in Houston, 2019, an underground American artist who was able to build a community of great followers. In that hall that day, I'm sure we were almost 20,000 people. But what really shocked me was getting to the outside of the hall, and I saw a long queue. I even thought those long queue were actually, what is it called, to buy ticket, but only for me to find out that they were buying merchandise that had the name of the guy, that has some of these lyrics and all of that. We are yet to look into all of that too. And like I said earlier, probably actors, people that have studied creative arts need to come more into the music business and help artists to actually build a sort of performance brand that when people see them, they are bringing more to the table. There's so much more that we cannot exhaust when we start to talk about. So people need to pay attention. And it's not that these things are new. They are already there. Just look at what is happening in some other clients and just bring it here, replicate them. There are some that are peculiar to us that probably they were being done before that people have stopped, that you can just bring into it. And I'm sure all of this can become opportunities that people can exploit.
ID Cabasa, we're pressed for time, but just before we go, I'd like you to spare a thought for people who are considering coming into the industry in less than 30 seconds.
Okay, so major thing that you need to do is to learn. So the industry is not void of knowledge. The problem is ignorance. People ignore the knowledge that are available. So I would say you take out time before you step in to first go and learn about what you're about to get into, then make good relationships. Relationships run this particular business as much as money does, but good relationship will actually help you have speed, that you don't have to learn from your own experience. You might need to learn from other people's experience. So I think those two should actually help to start off well.
All right, thank you so much, music producer Olumide Ogunade, popularly known as ID Cabasa. Thank you for your time.
Thank you for having me.
Well, I guess you've had a great time today, starting from talking about businesses, how to stay afloat, to talking about your investment opportunities, and then also talking about the music industry. I must say it's been a great show today. Many thanks for being a part of this, and this is our offering for you today on Business Edge. I am Perpetua Fasanmi-Peter. Bye for now.